Howdy, everybody. Welcome to Liberty Call. It is Tuesday, August 27th, 2024. Hope you're having a great day out there. I apologize for being a little bit late. Had to run to the butcher shop, pick up some proteins because we were out of food. I mean, we got food, but you like to have some chicken, steak, stuff like that. So anyways, hope you're having a great day out there. It is beautiful here today in Colorado. Got a little bit of that chill in the air, which is always nice. For those of you down in Texas, it'll happen in about November. But up here, we get it in like August, which is really nice. All right. Well, if it is your first time watching Liberty Call, if you right there in the purple shirt could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All right, let's get into the markets. Looks like, hey, they finished in the green. I had left before the markets had closed, and looks like they managed to get their way back into positive territory, barely. Dow Jones was up 0.02%, 9 points, closed at 41,250. S&P 500 up 0.16, 8 points, closed at 5625. NASDAQ up 0.17%, 29 points, closed at 17,755. The VIX was down 4.46% today. It's at 1543. Canada down 0.38, Brazil up 0.06, and Mexico down 1.31%. In Europe, Germany was up 0.35, the UK up 0.21, France down 0.32, the Netherlands up 0.05, Spain up 0.55, Italy up 0.52, Switzerland down 0.42, and Portugal up 0.45%. Russian exchanges both red today. The MOEX down 1.09%, RTSI down 0.77%. And lastly, the Asian markets. The Nikkei was up 0.72%, Australia down 0.16%, New Zealand down 1.62%. In China, the Shanghai was down 0.24%, the Shenzhen component down 1.11%, China A50 down 0.03%, DJ Shanghai down 0.59%, Hang Seng up 0.43%, and the Taiwan weighted when it closed on the 26th was up 0.37%. All righty, good stuff. I know I feel smarter after reading that. All righty. Let's get into the market recap. Dow clinches record close as focus shifts to Nvidia's earnings. The Dow closed at a new record high close on Tuesday, despite a cautious market sentiment as investors await Nvidia's highly anticipated quarterly earnings report due on Wednesday. Nvidia's performance is expected to be a key indicator of whether the AI-driven tech rally can sustain its momentum or it may be nearing its peak. Analysts, including Truist Securities, remain optimistic, noting continued improvements in Nvidia's business trends. Meanwhile, Apple managed to close slightly above the flat line despite the announcement that CFO Luca Maestri will step down in early 2025. Attention is now focused on Apple's upcoming product event on September 9th, with some analysts, like those at Wedbush, predicting a significant upgrade cycle driven by new iPhone models. I have never used an Apple product personally. I mean, my old business partner, he used to have an Apple phone and he would hand it to me occasionally and be like, all right, do something or send this text. And I'm like, there's no buttons on here. What am I supposed to do? I think my wife had one for a short bit with one of the companies she worked for, but I just don't like them. I don't like their computers. I don't like their laptops, their MacBooks. It's just, everything's weird. It's things that are in the wrong. I mean, maybe they work fine. It's just, when stuff isn't in the right place, I'm very used to, granted, people crap all over the Microsoft model and Office and all that, but I know how to use them. So unfortunately, unless I'm going to learn another product, it's just what it is. All right, jumping back in, Netflix saw a gain of over 1% after Evercore ISI raised its price target for the stock to $750, citing strong survey data that indicates robust consumer interest. On the downside, Paramount Global fell 7% following the news that Edgar Brofman Jr. had withdrawn from the bidding for control of the company, which could pave the way for Skydance Media to take control without competition. In other news, Hain Celestial Group surged more than 18% after reporting fiscal quarterly earnings that exceeded expectations despite revenue falling short of forecasts. Additionally, U.S. consumer confidence reached a 6-month high in August, suggesting that recession fears are easing That just means you're going to get punched in the balls when you least expect it, unfortunately. This data supports the case for the Federal Reserve to consider a 25 basis point rate cut in September. As Jeffries highlighted in their analysis, investors are now looking ahead to further economic data, including jobless claims, Q2 GDP revisions, and the Fed's preferred inflation measure, the Personal Consumption Expenditures Price Index, due later in the week. All right. So we're just sitting around waiting for, the Fed to get more data. Granted, we got more inflation data and a bunch of other data that's going to come out between now and the Fed meeting on September 17th and 18th. So there's a lot that's going to happen between now. I mean, what was it? I closed my calendar earlier. Let me bring it up. So today is the 27th. So 3 weeks from now is 3 weeks from today is when the Fed meeting starts. So 3 weeks from tomorrow, we'll know if they're going to lower rates, which if they do, I think the market will go up. But I mean, the better the market does, the lower they're going to reduce rates, unless something bad happens between now and then. Again, I wouldn't put it past, those in government or whatever to create some sort of catastrophe to, to accomplish whatever they're trying to get done. Sorry. Delicious. All righty, let's get to the next article here in the stack. This comes from Zero Hedge. U.S. home prices surged to new record high in June. All righty, home prices in America's 20 largest cities continued their upward trajectory in June, marking the 16th consecutive month of increases, according to the latest S&P CoreLogic Case-Shiller data. Prices rose by 0.42% from the previous month, a figure that exceeded expectations and indicated an acceleration from May. On a year-on-year basis, prices increased by 6.47%, though this marked the third consecutive month of slowing annual appreciation. So it's slowing down. It's not terrible. I mean, you can't afford to buy a house, but it's what it is. Overall, U.S. home prices reached a new record high in June, despite median new home prices showing little change. The relationship between home prices and Federal Reserve policies remains closely tied. But a potential turning point may be approaching as mortgage rates fluctuate. The Case-Shiller data, which is known for its smoothing and lag, makes it challenging to directly correlate home prices with mortgage rates. However, with home prices reaccelerating and mortgage rates dipping back below 7 in anticipation of the Federal Reserve's actions, there is growing speculation about the impact of potential rate cuts. Analysts question what Federal Reserve Chair Jerome Powell expects to happen if rates are cut while home prices remain at these record levels, suggesting the possibility of further market complexities ahead. Yeah, because if you start lowering rates again, the prices are going to start spiking. In a lot of ways, that's what held prices down from the 70s from the 80s and 90s. They were fairly stable. I mean, yeah, home prices did change to a degree, but we didn't have these massive spikes that we've had since 2009 when we've kept interest rates down at or near zero. All that did was push prices up, because you could sell a house for a higher price and the payment wasn't that obscene because the interest rates were so low. So anyways, all right. Yeah, that was it for that. So, was it? Hang on, let me check my notes. Was there anything else I wanted to cover there? Yep. Yeah, that was all. All righty. Got another article here, also from Zero Hedge. This one, I feel that a recession is going to hit. And that's in quotes. In this Dallas, Richmond, and Philly Fed surveys are slumping. All right. Regional Federal Reserve surveys from Philadelphia, Dallas, and Richmond indicate a deepening economic contraction, with weakening capital expenditures, plummeting new orders, and a significant drop in employment numbers. Respondents expressed growing pessimism about future business activity in August, with many forecasting an impending recession in the U.S. They noted a substantial reduction in consumer spending, which could have severe negative impacts if the trend persists through the year. Concerns were also raised about the Federal Reserve's delayed response in cutting interest rates, which may not prevent consumer spending from falling to recessionary levels. Inflation, while reportedly declining, has not eased prices in the design and construction industry, where costs continue to rise amid pressure to reduce prices. The burden on consumers is evident, with increasing personal debt personal debt and uncertainty around interest rates stalling economic activity. Respondents observed that consumers are struggling financially, with some even abandoning their cars to prioritize basic needs like food. Political uncertainty has also emerged as a significant concern, with respondents noting that it hinders business decisions and investment. The upcoming election is seen as a critical factor that will shape the future of American business, with fears of declining U.S. geopolitical strength and increasing international risks further exacerbating concerns. One respondent captured the sentiment with a limerick calling for lower interest rates to support economic stability. Funny. And actually, where that limerick's down here at the bottom, it says, one opines that interest rates are a bit too high, many borrowers in pain and let out a sigh. We plead with grace, bring rates to a place where capital formation does not result in a cry. Funny. Alrighty, got one last article here. It's more just food for thought. It's titled, I'm a Financial Advisor, 7 Ways People Become Poor in Retirement. Oh, wrong thing. There we go. All right. Retirement is often idealized as a time of relaxation and enjoyment, but without proper planning, it can lead to financial hardship. Financial advisors Joseph Meyer and Michael Ryan highlight several key factors that can contribute to poverty in later years. One major issue is the lack of a financial buffer to handle unexpected expenses, such as market disruptions, housing repairs, or financially dependent adult children. Another risk is overconfidence in investment professionals' ability to predict the future. I've gotten that question. What's going to happen? I don't know. I get the same information you do. I just have to read it and digest it. Leading to financial vulnerabilities. Meyer noted that past predictions have often been overly optimistic, with markets declining unexpectedly. Pension decisions also play a crucial role. Opting for the highest payout based on a single retiree's life expectancy can undermine financial stability if one partner dies prematurely. Additionally, tying up wealth in a home, which requires ongoing expenses, can strain finances if sufficient liquid assets are not available. Mr. Ryan emphasizes that the lack of comprehensive financial planning is a common issue. Many people underestimate the impact of inflation on their savings, failing to account for rising costs over a potentially long retirement. Overly optimistic investment return projections can also lead to unrealistic expectations. Yeah, I try to make things as terrible and I know some of my clients get pissed because I'm like, no, sorry, we got to go with the lower expectation. Personally, I've seen things actually turn out better, but we have another few cycles like we just went through the last 4 years, and inflation explodes over the next 30 or 40 years a couple more times. It's just going to make life really hard. All right. So in summary, achieving retirement security requires diligent planning, realistic assumptions, and regular financial reviews to ensure long-term stability. All right. Well, that's everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. That's where you can get all your financial needs and financial planning needs taken care of. So give me a buzz. I'd be happy to give you help you out. All right. Well, that's everything, like I said, that I had for today. If anyone needs anything from me, please go to the website. Otherwise, have a fantastic evening, and I'll talk to everyone again next time. Adios.